This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, May 1st. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals studio. Let's do our week in preview and happy May Day. First of all, if you look at the action that has taken place in precious metals, we feel very comfortable with the fact that the recent correction has been predicated on heavy commercial selling. And what I mean by that is if you look at the COT, which is known as the commitment of traders, what you would have found over the last 10 days is that the spec long actually was at its highest level in history, and the commercials were major sellers of both silver and gold at the higher price level. And if you look back and find when has this happened in the past, you'll find typically what takes place when this situation develops is a corrective move downward. Now, we hit 1865 in silver, which was basically approximately 7 to 8 cents above the recent high. And sure enough, the heavy selling by the commercials was able to knock the price of silver back to the downside. Now, the question is the number that we hit today, 1680, which was also the number that we pulled back to on January 27th, before we rallied back up into the 18s, and then again on March 18th, before we rallied back up into the 18s. Now the question is, will the commercials start to come back in and buy back their forwards? Because they realize that if silver were to drop below 1680, it may cause some technical anxiety and add additional selling to the market. And at that point, in essence, the commercials would actually be cutting their noses off to spite their face, because quite frankly, they would rather have silver trading in a nice trading range. 1680 being key support, 1850 being key resistance. And if you look at the driving forces that take place in the market, you'll find that one, we weren't able to get the tax bill put on the table and accepted yet. Obviously, there has been communication and a lot of banter back and forth. We haven't seen the Obama healthcare situation fixed or replaced, which was one of Mr. Trump's promises. And last but not least, we certainly haven't seen any stimulus added to the market. So that inflationary push of additional money that has been expected after the election hasn't come to fruition yet. So what we have is a situation where the precious metals have pulled back. Now, silver hit its high of 1865. We felt fairly confident that we could see a pullback, but today that 1680 number in our eyes looks like a great buying opportunity for people who are accumulating positions for protection and potentially profit. Now, in the gold market, ironically, we hit a high of 1297, which was the exact number that gold needed to hit in order to break above its downtrend. Unfortunately, along with silver, it didn't quite have the strength or upside impetus to push through. So lo and behold, what we've seen in the gold market is a classic corrective move all the way back down to its 200-day moving average, which sits right at 1255. Some people are a little bit fearful that if it breaks under that 1255 number, that we may actually end up seeing the 100-day moving average tested, which sits all the way down at 1225. Now, whatever happens based on where we sit today, right now, owning and buying precious metals looks like a great short-term and long-term investment. If silver were just to bounce back to where we were trading at 3 or 4 days ago, we're talking about 1750, 1780. There's nice short-term profit potential in that market. If gold holds the 200-day moving average, it could easily put in a base and once again get ready to race and potentially break through that 1297 and go up and test psychological resistance at that $1,300 level. But the bottom line, once again, is if you think about what's happening in the marketplace and you look at where stocks are trading, the NASDAQ hit an all-time high of 6,000 recently. And if you think about the overall situation that exists out there in the United States, retail sales hasn't catapulted itself higher. And if you look at Sears, JCPenney, and Macy's, for instance, those three companies expect to shut somewhere between 8,000 to 10,000 stores this year alone. Now, a lot of that business has been taken up by internet business, but overall consumer spending isn't going through the roof. And we have the potential for a rate hike, not this week when the Fed meets on Tuesday or Wednesday, but probably in June. And if that were to happen and the stock market was potentially going to go through a corrective move, and if interest rates are going up, real estate prices will be hard pressed to continue to go higher. Where would you want to park your capital? Typically in the undervalued asset, and that's commodities and that's precious metals. So this week I plan on meeting with Bob Wiedemer, the author of Bubble Economy and Aftershock. He will be making a presentation to the Monex company on Tuesday. And you might want to tune in and watch the interview that I do with Bob. And he's going to be bringing out a new index for investors to watch. It's an index based on uncertainty. And there's one thing that is certain, and that is we live in a time of extreme uncertainty. And in that type of situation, it's always a positive thing to own precious metals. Give us a call today. We can help you get involved and get started and put some precious metals in your portfolio. Thank you.